You don't just want to grow your money, you want to keep more of it. And as this year winds down, there's one strategy most families overlook that could make a huge difference in the long run, and that's Roth conversions. So let's talk a little bit about proactive planning today and how you can save a lot of tax regret for tomorrow.
Welcome into Legacy Beyond Wealth. Ben George with Rob Shelton. He is the founder of Axio Wealth Management there in Utah. And we got a good show for you today as we're recording this towards the end of the year. You might be listening to it or watching it at a different time, but the conversation will still hold true no matter when you're preparing for this, because Roth conversions are a big topic towards the end of the year. I know, Rob, you talked about, this is maybe a good time of the year for you when you're talking about tax planning and some tax strategies you maybe implement here. So why is that? I know a lot of people have already shifted their mindset. I'm off to planning for the family. Holidays are coming up. I got a lot on my plate right now. So let's talk about why this is important for people this time of year.
It is. I love sitting down with a tax professional, with a client, and be very collaborative to review where their income is at for the year. And it's nice to be able to do kind of right here in this October, November timeframe, because we have a pretty good year, look back of a history of where income we've made in the past 10 months or 11 months and where things are going to maybe land out in the next one or two. And so as we're starting to think about gifts and the holidays and things of that nature, we also want to remember tax brackets, because this one strategy right here is one where we could be able to really save a lot of taxes in the future, which is that Roth conversion that we're talking a little bit about.
Yeah, and it's important to keep in mind, like you're talking about this, you're wanting people to pay tax, right? I mean, you want to be intentional about it, but it's okay to be paying some tax, and you actually, in this case, would recommend, if it fits, to actually be paying more taxes.
Exactly. I've got a few clients that are towards the latter part of their life, and you think about it. In one hand, they have this really big bucket called our traditional IRA, and what you've got inside that is a lot of assets that eventually are going to be taxed, right? That's money that you've put inside there. You've gotten some tax benefits by not having it taxed and having it grow tax deferred. And at some point, the government's going to say, hey, you need to start to empty that bucket out, and we want to start collecting some of the taxes that are on there. And so, this is where we have something called required minimum distributions that come into play. And the goal here is, if we don't start to address that now, the government will force you to start to address that at some time later on down the road. So by taking a look at it and doing small Roth conversions, leading up to that age of where you have to take those mandatory distributions, can really help save you a whole bunch of tax in the long run.
Yeah, and that's the whole reason you're having these conversations, right? Is to try to save that money over the long run. Not everybody's thinking long term; they're looking to next April and figuring out what's most important for that. But it's not always the best approach to being efficient with your money and building up your wealth over time. So, for people that are kind of getting into this, do people understand kind of right away how these things work, or is it a little bit confusing for people?
I think the first few times it's a little bit something new to get used to, right? Where I'm wanting to pay tax now, because usually we're trying to find strategies of how to not pay a lot of tax in a current tax year. But just reminds me, this last week we had a meeting with a client, explained this to them, and they got it down really good. This is about the third year that we've done this with them, where we take a look and say, okay, your adjusted income is at this amount, and you've got X number of dollars before you grow into another taxable bracket, and so a higher tax bracket. And they called back a few days later after we had met and talked with one of our team members, Britton, and said, hey, Britton, just want to make sure I understand this. And they retold it to him, and he says, hey, you nailed it. You got it right. And the funny thing is this, they then immediately bring on their sister into the conversation that was there in the room with them, and said, see, we told you that's how it worked. And she's like, I can't believe you do that type of planning. I've been with my financial professional for years, and we've never even talked about strategies like this before. And so that's really where it reminded me that, proactive planning is really important to be able to do out there, and just not reactive planning.
Yeah, this is definitely proactive planning. And again, a reason why you work with a professional that does this every day that can be proactive, because we're not always thinking about these things normally if we're not doing this every single day. So I don't even think we've actually defined Roth conversion here, Rob. So let's just begin there too. For anyone that's not totally familiar with how they work, explain it for us.
Yeah. So the idea, like I mentioned before, if you've got this big bucket that has an IRA, if we can call it that, that has accumulated a lot of money inside of there. What we're taking a look at is, let's just throw some hypothetical numbers out there. Let's say your adjusted gross income for the year was about 150,000, and let's say the next tax bracket jump up was at 200,000. Well, we'd see that there's about a $50,000 gap that's there where we could pull some money out and pay taxes on that at the same rate. And then what happens is we put that into a Roth IRA where any future growth on that money never gets taxed again. So you're basically telling the government, hey, I'm going to take this money out. I'm going to pay tax on it today, but any growth on it, I'll never have to pay tax on in the future. And so it's a good way to be able to get money out at a sometimes lower tax bracket than maybe when you were working, but also be able to slowly convert it over to where every dollar that makes it into that Roth IRA, you're declaring financial freedom from the IRS by saying that any growth on that dollar, I'll never have to pay taxes on again. Or even your posterity, those who would be able to inherit that money would not have to pay tax on that dollar again. So I kind of joke with clients, it's a good way to settle up with the government and say, hey, I'll make a deal with you. Pay the tax today and I'll never have to pay taxes on it again. And a lot of us would want to jump into a program like that.
Yeah, I know it can just be hard to pull the trigger right away, but it does have a lot of long-term benefits if done right. And again, if done at the right time too, right? I mean, there's a reason why we're discussing this now towards the end of the year. The timing does matter.
It does, because you are increasing your tax liability. And what we don't want to do is do it too early in the year and there'll be some kind of unforeseen taxable event with some other money coming in that you couldn't foresee or something of that nature. So doing it towards the end of the year gives you a little more predictability on where your income is at and really helps dial those numbers in just a little bit more to be very effective in the tax planning that you're doing. But this has got to be done in collaboration with your financial advisor and your tax professional, and they've got to be talking. And if they're not, you're missing a huge opportunity for saving on your future tax dollars.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
All right, so for anybody that's looking to maybe get this done by the end of the year, let's provide, again, a little bit of practical guidance for them if they're thinking, hey, this is something that sounds like I'm at least interested in learning more about. What should they be doing before the end of the year?
Yeah, I think the first thing you want to do is be able to make sure that you have a collaborative conversation. So one thing that we do proactively with all of our clients is we call their tax professional and set up a call where we have a meeting with ourselves, the tax professional, and the client. And the client's providing all the information to the tax professional where they could run a hypothetical situation to see what their taxes would be like if it was April 15th today. And then from that, we start to do some collaborative planning with that tax professional and saying, okay, what if we looked at doing a Roth conversion of X amount of dollars? What would that look like from a tax perspective? And then we're dialing it in with what the client can be able to make sure that they feel is within their capability or realm to be able to do. And that way there's no surprises when April rolls around. And so really starting at that tax professional, at financial advisor and client level, all on the same call or in the same room, really is where that magic takes place.
And look, there are a lot of financial benefits to doing this, right? If done right and if it fits your need. That's why we're talking about it. But as we like to talk about here, it goes beyond money, right? It goes beyond wealth here. So give us the bigger picture for this discussion, Rob.
Yeah, I mean, if you could imagine it, I mean, some of the clients that we've been doing this with have just absolutely enjoyed it. So the last few years in the market have been really good. I mean, most people have experienced a double-digit return in those over those 2-year periods of time. And if you could take that dollar and say, I'll pay tax on it now, and then we transfer it to a bucket where there's no tax, and we've seen that kind of growth that we've seen the past few years, it can have a huge impact because at the end of the day, it's about what you keep, not necessarily about how big the dollar amount is. And as we get more money switching over to that Roth IRA bucket, you're able to keep so much more because the IRS and the government can't tax that money anymore. And that really can be powerful for a lot of people and peace of mind, not having to worry so much about taxes in the future.
Look, that's the big part of the reason why you do this show, Rob, is to make sure people understand it's not always about chasing those returns. It's not always about the bank account balance. It's about building confidence, building that purpose into your plan. And I know that's what you do every day at Axio Wealth Management. And it kind of just I want to kind of finish off with your collaborative approach, because I know a lot of people think, okay, tax planning, maybe I should just go talk to my CPA. But I know part of what you do is working in the CPA, working in those different professionals as part of that ongoing conversation you have with clients.
It is. And I would tell you, all the tax professionals, well, I say majority of them that we've worked with in doing this, absolutely love the collaborative approach, because they can see the benefit of really what's taking place in the client's life. And it's helping that tax professional really be able to be much more effective in their job as well. And so I look at it as a win-win all around, where we're leveraging the collective wisdom of the group to really make a significant impact for that client and in their life.
I love that. Well, if you want to learn more about that collaborative approach and really to find out if this Roth conversion makes sense for you this year to go ahead and start taking steps towards doing that, make sure you get in touch, axiowm.com. Also, again, all the contact information is in the show description. You can find it there. You can also leave a comment for Rob as well. But if you've enjoyed this video, if you watched this long, please hit subscribe. We appreciate that support as well. Rob, hope you have a good week.
Thanks so much, Ben.